G'day, thanks for watching. Let's take a look at the NASDAQ. So the thing about the NASDAQ is that the all-time high was made way back here on the 29th of October. Since then, we've had a lower high around about mid-December. And most recently, on the 7th of January, that preceding lower high was approached. Let's bring some data in and see what's happened since. Well, it's still sort of hesitating. There's a couple of extra bars there, but it really hasn't gone past its highs of the mid-period of December. And compared to the Dow and the S&P, it's not breaking into new all-time highs. So it has crossed the 20-day FLD, and we have a 20-day FLD target here, which essentially says price should get back up to the all-time high. It doesn't seem to be in any great rush to do that. We can take this old valid trend line off, do some housekeeping. We are past these now. I can leave that one there. Take these away. And actually, we'll leave that one alone. So this one here was the 17th, so that's correctly labelled, 17th of December. And over here, well, this was this was as good as cycle analysis gets. So this is a 40-day low, and the low occurred on the 2nd of January. Have a look at this tight zone here. Coming up to that, I was making the point that it's a very small zone. And lo and behold, bingo, it actually hit in the zone. It made its low on the 2nd of January. So what we can do is we can update cycles. Cycle Master is going to choose this because of the overlapping orbs here. Very good. So next in line is our 20-day over here, which is also a 9-week. It's the halfway point of the larger cycle, whether we call it an 18-week or a 20-week larger cycle, whatever name we use, it's the larger cycle. And this 9-week is half that larger cycle. So let's just get a 9-week organised. And it's not actually on this harmonic, the 9-week, but what is on this harmonic is this little 20-day. So those railway lines are either side of a 20-day zone, and that will do us as a reference for the 9-week. Now, the 9-week orb would actually be larger than this 20-day orb, but this gives us a period to watch. So where's this zone? 18th of January to the 25th. Now, if you want to understand how cycle timing fits into a complete trading or investing plan, start with the path, a 16-page article setting out the learning path to cyclic understanding. You'll find the link at the top of the description here. The 9-week can be a cycle that has a fair degree of plunge and then bounce. I've mentioned that on the Dow recording and also on the S&P recording, so I'm not going to duplicate it here. But essentially, the same situation applies. So the NASDAQ is lagging behind the S&P and the Dow. The two aspects to that. One is reversion to the mean, which means this laggard may in fact get some rock and roll to the upside and catch up. It's hard to know if that's going to be the case. But if that was the case, then this would be a great market to be long on, because catching up, that would be good price difference. The other alternative, of course, is to stay with the leader, either the Dow or the S&P, and not worry about the laggard. Well, these are the sorts of things that traders have to make decisions on, and with a little bit of luck, they actually have decision-making processes built into their proven profitable plan. Okay, thanks for watching.